Hola, amigos. Hello, hello. What's up? Austin's in the house. He's outside the house. He's not in the house.
Man,
He's outside the house still as the renovations continue, right?
the renovations continue. Yes.
Is it close to being done over there or what?
Depends on who you ask, right? But yeah, I think we're getting there, man. And it's just it's never ending, right? And I'm like, I mean, fun, right? So
Yeah. Well, you know what else is never ending? The cryptocurrency market.
the never ending oscillation and the right now sucky time. That's the
Yeah,
Austin term. Crypto sucky time. There you go. Right,
there
that's
you go. It is pretty sucky. Things are turning a little bit green. I guess we can find a little bright spot in that.
Shib's up. What,
Bitcoin
5-6%?
Yeah, Shib's actually one of our top leaders today. In the last 24 hours in the top 100, it's up about 4.63%. So here, we'll go ahead and share the screen here and welcome in everybody. Make sure you guys hit the like button, subscribe down below. We're gonna have somebody will be joining us here in a little bit too. His name's Tom. He'll be joining us here at the top of the hour. I met him out at the Ethereum conference. Out there in Toronto, and fellow content creator. We did a little interview, and he was a really cool guy. So I'm going to bring him on. I know he had somebody on his show today talking about crypto taxes, so we might even bring that up a little bit. Just pick his brain on where he thinks crypto is going, just get his thoughts, and I want to kind of plug his channel and stuff, make sure we're helping him out in that regard too. So he'll be joining us here in a little bit. But things are turning a little bit here. I mean, not much going on. Shib, there you go, still ranked number 15. Up about a little 4.5%, a little bit over that, but nothing too crazy.
It's going against the tide, right? I mean, it's going against the tide for everybody else, you know?
Yeah. I mean, just here in the last hour or so, Bitcoin's turning a little bit. I mean, when we say turning, just coming, from 25 something back up to 26,000, nothing too crazy. But what do you think here with Bitcoin? Do you think we're going to continue to see a further tumble before we come back on up? What do you think?
I do think. I think that we've got more downside risk. I think it's 20,000 is probably worst case scenario. And then, like we talked about, I think in our live stream, was that yesterday? Did we go live yesterday?
Yeah, we did. Yeah.
I've slept since then and had a couple of drinks.
What'd you drink? What'd you have?
Well, you. I don't know. I'm going to tell a little thing. This man loves White Claw, which I think is disgusting. I think
that's not true. I don't love White Claw.
Every time I see you somewhere, you're like, I want a White Claw. I'm like, don't drink a
No, that is not true. I like White Claw over certain things. I don't prefer a White Claw over everything. Actually, I like High Noons now. Have you had the High Noon tequilas?
Oh yeah, they're good. High Noons is way better because it's vodka. White Claws suck. Okay,
and it's less carbonation.
Yeah,
carbonation in White Claw just messes me up anymore.
Well, I told you about Deep Eddy, who's a vodka manufacturer, actually out of Texas. They make.
I can't find them up here.
Well, they're famous. Go to Google and search Deep Eddy. Deep Eddy vodka mixers, whatever, and you'll find it's better than High Noon. So that's what I had a few of those.
Come for the crypto, stay for the Deep Eddy vodka.
Music? What the hell are you doing there? Deep Eddy vodka music?
I have no idea.
God, man. Mixer.
Come for the crypto, stay for the Deep Eddy vodka mixers.
Yeah, man. You can't find good help these days. Go to images.
Are we really doing this right now?
Yes, we're doing this. That's what I was drinking those right there. The vodka, the picture of them,
those guys.
The grapefruit's amazing. So
all right, they look really good.
They're good. And that's what they're easy. All right. So what was your question? I don't even know what your question was.
Well, I mean, basically, where's Bitcoin going? But I mean, I'll just jump in and say, because we said this yesterday.
Yeah.
Basically, we are doing exactly what we would expect to see as we get closer to the halving. This time of year, closest, like the year prior to a halving. So like the August, September, prior to the next halving cycle, has always kind of looked like this. And we're dialing back a little bit. So, I think this is kind of a normal kind of dip in the process. And then whether we turn in Q4 or Q1, I think we will start to see a little bit of a turn toward the better. But I think most of those gains are going to come after the halving, right? Like they usually do.
Well said, brother. You need to have a YouTube channel. You're really good.
Yeah, I guess. I mean, sometimes. I had my coffee today, so that helps.
Yeah, that's good stuff, man. You got your shit together, dude.
Yeah, man. So everybody out there, hit that like button. We're about to bring in our buddy Tom in here too. So let's try to run this thing up to about 100 people. I know it's kind of a midday stream. It's kind of a boring time in crypto, but we're going to try to make it as unboring as we can, bringing you up to speed on all the news and everything we can to give you some value here. So hit the like button for us, and we know what that does. It brings more people in. Drop in the comments also too where you're from, where you're checking in from. Little roll call. That helps out the algorithm. And more importantly, I just want to kind of see where everybody's at, because it's always cool seeing, where everybody's from and things like that. So
Is unboring a word?
I don't know. I just made it one. I don't know. Is it unboring?
Unboring. I don't know if that's even a word.
I don't know. It should be. Let's bring in Tom. So,
hey, Tom, is unboring a word?
You just made it a word, so it
There
counts. It's in the Great Dictionary of Austin, so it counts.
There we go.
So, Tom, what's your feelings on White Claw?
What I saw is something in the store the other day that disturbed me. It was a White Claw liqueur or something like that. It was the same brand, and they're coming out with something even worse. So
Zach
I think
is single-handedly keep White Claw in business.
Maybe we should go. That might be a play on their options. Maybe need to buy some calls on that one or something like that. But I would say that, it's for the weak of heart and for the dead of tongue.
Oh, wow.
That's harsh,
man.
Ooh. Brutal, man.
Tom just
I couldn't show up on Zach's show without being a little controversial.
Dude,
that's how the internet
Tom
works,
just
right?
earned his stripes, man. I like this guy. He gets invited to everything now, man. That's some good stuff there.
The best part is I just made that up. I just dead
good.
of tongue. I was like,
Dead of tongue. Wow.
I like it.
Just pulled that out of the air. That's awesome. You like my glass is taller than my head. Look at this thing. It's huge.
What do you got?
It means there's a lot to pee in there after you're done drinking it.
I gotta go. I'm just gonna go around to the bushes over here. Gotta go pee. Be right back.
So
the level of professionalism on our live streams is insane. There you go.
Hey, it's a crypto bear market, man. You gotta find things to keep it interesting. And one of the things that was interesting recently was the ETH conference out there, the Futurist conference, I guess combined conference. I met Tom out there. Tom, you had an awesome spot right in front of the stage. What was your experience like out there, man?
I got it playing up here in the corner here, right there. The experience was something else. As I say, I've been giving this DYOR media thing a run for a while now. But this was the first time I went to a crypto show. I've been to plenty of trade shows over my life for various things, and they have all things in common with each other. Speakers, areas with booths and people selling their wares, and all kinds of gimmicks for people to sell and all that. But this one was different in the fact that it was in Toronto's biggest nightclub. And I'm not a person that does the nightclub scene at all by any means. It's been a lot of years since even thinking about that. So I have not been in one in a long time. And this one had a full digital stage, and you can see in the video behind me, the light and all that. That's not set up for the conference. That's just the stuff going on that's part of the venue. And so it made for this. As soon as you walked in, people were like, wow, what's going on here? The optimism it brought and the feeling of like, hey, the bear market ended at the door there. That's for sure. And when as soon as you walked in, especially with the SHIB announcements coming and all that type of stuff, people walked in saying only good things are going to happen here. And I had that feeling from the people I interviewed. Regardless of the price of things, people were investing money in new projects and new protocols, and just new ways of doing things, setting the stage, not just waiting for the bear market, but to create the bear market because they have new projects and bringing new VC money in. As we all know, the VC money has gone from a high of here a year and a half ago or 2 years ago down to way down here into digital assets. But before, if you look at the stats, people just throwing money at everything, like throwing it at FTX. They didn't even do any due diligence. But now when you go to this conference, you talk to people, you realize people are laser focusing their VC money on projects that will bring utility, projects that will bring more people into crypto, or not just crypto, into digital assets. I thought that was a very good thing because if people are going to put their money and do due diligence and make sure there's proper management in projects, good things are going to come down the road. And so that's kind of what I took away from this conference, being it my kind of my first one. But I got to tell you, it was a lot of fun. I set up shop there in the back and just kind of went around talking to people, seeing the speakers and saying, who can I interview? And all of a sudden, this guy walks by. I'm like, he looks familiar. Where do I know him from? Because it's Zach Humphreys, ladies and gentlemen. And I just grabbed him. And Zach looks at me like, this person looks familiar, and I don't know why. And all of a sudden we realized we exchanged messages beforehand about things. And I said, hey, come on, let's do an interview. And we did a quick interview about the show, about SHIB and all that. And it worked. We did well together. And I think we have a future together in sports broadcast. Crypto broadcasting.
That was Zach. I love Zach sports broadcasting. You ought to just start doing your videos in sports broadcaster voice, dude. That'd be awesome.
Maybe like once a week or something. Just kind of, when you're not expecting it,
Yeah.
Back. It's gone.
Something goes down like 20% or
exactly.
Yeah. No, it was fun though, man. And you had a great setup. You really did. I mean, the conference itself was awesome. I know, the part of conversation that we had kind of about some of the newer companies out there. One of those companies, shout out to Corium. Austin and I both work with Corium. They're a new enterprise layer 1 blockchain. So, Tom, and talking about that, kind of bridging the gap from Web 2 to Web 3 and where this VC money's going, I get the feeling a lot of money's heading in that direction. Obviously, there's a ton of different sectors. There's a ton of things to like in crypto, but it seems as if that's kind of a no-brainer. These blockchains that are going to be helping bridge the gap and really kind of tailored toward whether it's one company or a few different companies in the same sector. What do you guys think about that? I mean, whoever wants to jump in first on that. I should have said person because now you're waiting. My bad.
I think I'll have some coffee right now.
Yeah. What was the question? I'm sorry. I was having this moment.
Go ahead. It was basically like the enterprise grade stuff, dude. We've talked about this, right?
I think EGB is my personal opinion. You and I have worked with Grape, Corium, and I know there's others. My personal opinion is that they are going to be a massive category. That's how I think of it. A category just like, NFT, DeFi, gaming, etc. I think the EGB space is going to be huge. I think it's in its infancy, as we can see, and there has to be we need them, right? I mean, if you look at Ethereum, 20 transactions per second, whatever that number is, and it's not. They weren't built for it. They weren't built for enterprise grade. Period. That's all I got. I mean, there's going to be a massive space. It's just a matter of not if, it's when.
Yep.
Well, I guess that's a great topic to bring about. As I said in the interview with Zach, is I have not been a follower. Don't tell anyone. I have not been a follower of SHIB. Shh.
No.
Yeah.
But with SHIB coming online with Shibarium and a lot of other projects trying to speed up the particular blockchains with layer 2 solutions, lower the gas fees with it, because we've seen the effects of a busy Ethereum chain. That can only be a good thing. And frankly, on the enterprise grade stuff, a good example is JP Morgan's Onyx system. Their internal system in which they've tokenized their internal assets and external assets to trade amongst their divisions and top clients. That's a gasless blockchain for them. It's an EVM fork, but it has no gas. So they've eliminated that. So, I don't know who set it up for them. Maybe Ripple did or whomever.
I think Ethereum did.
They had to. Well, I don't have any idea. Maybe a commenter can has some info on that.
Chime in on that. Yeah. Go ahead, Tom. Sorry.
They said just moving stuff around, this gas is too high, and we can either rely on a public layer 2 or just do it ourselves. And they just, because they have billions, they just did it themselves. But that's showing that the enterprise grade stuff needs to be low cost, because as their volume goes up, they don't want to be paying Polygon millions of dollars a day or a month or whatever. They want to be able to move stuff around without worrying about the cost of that.
For sure. Tom, so what interests you the most about this entire sector? What have you been getting deep in the weeds in, and how long have you been in crypto?
I I got into crypto. Let me get over in the center of this picture here. I got into crypto the old-fashioned way. My son told me about it.
Awesome.
My famous story is that when he was about 13, he said, "Dad, you gotta buy this thing called Bitcoin." And I was like, "Oh no, son, that's very risky. You know, family only has so much savings. We need to put it in something." That was when the Bitcoin price was about $76.
Oh,
Yeah. And so had I had listened to him, things would have been different for the old striking group right now. And then later online, he came and said, during COVID, he said, "Dad, there's this thing called SafeMoon." And I was like, all right, I'm not going to ignore him again. And it was like right on day 4 of SafeMoon. Things went, I was like, hey, this crypto thing is good. Anyway, my normal COVID job was in the defense and manufacturing industry, and the COVID took it apart piece by piece. So I ended up needing to do something, and I have a background in commodities trading. I started with companies called E.F. Hutton and Prudential Securities and Shearson Lehman and that type of stuff. And so once I got into the weeds of crypto, I was like, oh, I get this. I understand it. Well, mostly I didn't understand liquidity pools and that type of stuff. So I got into it fairly blind, but having a background in financial a little bit, and promptly learned all the hard lessons that everyone did by getting rug pulled, by investing in projects with no actual owners by them. All the things I talk about in my show, Rugged, Ruined, and Wrecked, about the general problems with things, bad management, rug pulls, honeypots, all that type of stuff. And so I learned all those lessons the hard way, and I took those to heart, and grew through either talking about them or reporting on them or whatever. Grew through that whole basically crypto growth thing, and realized things like, and I know people are going to beat me up for this, that I've traditionally said NFTs are junk, because cartoon NFTs, because eventually they go to zero because the value of them is just based on nothing. And there's a real world aspect. There's real world cases for NFTs. It's just not developed yet. And sure enough, that's starting to happen. And one of the topics I've been really talking about lately is real world assets and getting the tokenization of real world assets into the blockchain to ease the trading of that. Here's a good example. There's a way to trade corn electronically, the oil, gold, cotton, orange juice. Think of all those types of things that you can trade physically electronically now. Can you trade real estate electronically? No, you can't. Can you trade shares in your car or shares in a collection of watches, things like that? No, you can't. Can you, though? Will you be able to? Yes, you can. And the value, another analogy I'd like to tell people is that you think about this big market of Bitcoin and how everybody is so attracted to it, and it's like, oh my God, it's the greatest thing ever. The value of Bitcoin is what right now? $400 billion or so, roughly. That's only the value of the real estate in downtown Manhattan. If you think about it,
it's pretty
in
wild.
The big picture. I know. And so when you think about the potential for the money to move onto the blockchain, or the blockchain to control things in the real world, the size of the market is far larger than what we can think about with just Bitcoin itself. And so getting the real world assets on is something I've been following a lot. I've been doing a lot of shows on it. And it's been enlightening because as new companies have come up with way. I interviewed the CEO of a company the other day who has their company sets the stage for all the legal work to get done with real estate. And they have what's called a passport that brings all the liabilities, title, representations, and warranties into a tradable NFT. So you can literally in 3 clicks buy a piece of property. And it's not something that's, it's going to come down the road. They actually have them on OpenSea and on other things, and they're starting a project with a German exchange. I can't remember the name of it. So you can literally buy real estate, and they're planning for millions of projects to be on there. And so they're also developing AI to sort through them to basically be able to, you can put a basket of real estate that fits your profile. It's just amazing. It's mind blowing. And once those types of things start being able to be traded, then in order to bridge this back to the topics at hand for you two, you'll be able to use your SHIB to buy a piece of property on the English coast or in the south of France or in Central Arkansas or something like that. And that's kind of what blows my mind. We've always been waiting for the legal aspects to get caught up with it. And tomorrow on my show, I have Adam Kai of Virgo Exchange, Virgo CX, playing the interview I did at the Futurist Conference, talking about how his exchange is getting ready for real world asset trading. So it's a big thing, and I've been focusing a lot on it. There can only be good things to come.
Yeah. No, that's awesome. So guys, make sure you guys are subscribing over here. I dropped it in there. It's actually still in the comment section there for you. DYOR Media Network. So this one tomorrow, coming up in 21 hours from now. Check it out and give Tom a follow on Twitter as well. I listed that in the comment section.
Thank you very much.
Yeah, man. I know you're taking a sip of whatever you're drinking over there. You say it's water. I don't know what's in there, but what's on your mind over there?
Mine's got vodka in it.
Vodka. That's it.
That's actually how I make all my content. I just drink and do it.
There you go.
The next day you wake up and see, oh,
what did I say? Oh shit.
What did I say in that video? But yeah, it's funny, Tom. I was talking to a guy one time. I was in Florida, and he's working on the Avalanche blockchain, and they're doing fractionalized real estate. It was really interesting talking to him. I don't understand it fully, but I get the hype. I understand how big that could be, allowing people to get pieces or shares of real estate. But you're really talking about crypto being used in everyday life. Do you think certain cryptos have a leg up in those like micro transactions? Like you're talking about buying a cup of coffee, buying a shirt, buying a pen, or buying a candy bar or whatever, versus buying homes, buying cars and trains and automobiles, things like that. I mean, is there a difference there? Is there certain blockchains, certain projects that are better suited? What do you think?
Well, my experience with the micropayments has been more along the lines of using Stellar XLM. I'm not promoting that for any reason other than it's fast and it's easy, and it almost instantly settles any type of transaction. So I've been using that. A good story is I had to pay. I had some video work done by a guy. Just put the messages out there. I need this video work done, and he said that'll be about the equivalent of $500 US. I didn't know where in the world this guy was, and I said, "How would you like to get paid?" And he's like, "Whatever." I listed a couple of cryptos. He said, "But XLM works the best for me." I said, "Okay." So I sent him the equivalent of $500 US when the videos came in. And then later I said, "Hey, did that work out fine?" He goes, Yeah. He said, "I'm in Croatia, and my exchange, I have that wallet set up so that anything that comes in instantly settles to euros. So he has no exposure to volatility and instant settlement." And as soon as I realized that, I was like, this was 2 years ago. I was like, oh, this is really going to work. This is a lot. I didn't have to go to the bank and get asked questions about transferring money. Do you know this person? Well, not really. He's in Croatia. Oh, suspicious. And I didn't have to give my credit card and charge fees for that, get fees for that international transaction or whatever. I said, all right, this payment thing's going to work. And sure enough, it has. We've watched Western Union turn their back end settlement process, starting to use blockchain for that. Famously, just recently, PayPal has come out and said, we're going to do a stable coin, which will, since PayPal is merchant terminals around the world, that settling, paying in PayPal stablecoin or just using your account and PayPal draws it from whatever you have in their account. It will be quick and easy. And of course, other blockchains and other projects that have good liquidity, or not good liquidity, great liquidity, a lot of volume, and a lot of a community behind it to spread the word, will obviously be well used for payments and things like that. If they're slow, people aren't going to use Ethereum for payments because they're like, well, that $10 payment costs you $5, and you gotta wait a few minutes for it to settle. And they're not, Bitcoin not so much, because you have to wait a long time for that to settle. But other thing I've been having a lot of experience using lately is using the Lightning Network for Satoshis. And that the fact that that's basically free is unbelievable. I mean, I use Noster a lot for social media and things like that, and people tip each other, and it's instant. Someone says, "I'm going to send you, 100,000 satoshis," and you get 100,000. You don't get, the person doesn't have to send 110,000. They send.
Right.
It's free, and I don't. It's free and it's instant. So there's all sorts of great things coming along payment. We complain about the days of cash kind of coming to an end, which I don't want to come to an end. We still should be able to use cash when we want. But the days of being able to pay for things quickly and cheaply without having to worry about the gas fees of Ethereum are certainly here.
Yeah, love it. So what other top 100 projects have really kind of piqued your interest since you've been kind of diving into crypto? Anything else that's kind of maybe under the radar, something that not a lot of people talk about? I know people always like to find, the diamonds in the rough, if you will.
Yeah, no, I wouldn't say I had one under the radar, because I on my shows I tend to do more high level things. But two things. I've been a fan, but not a large investor, just a fan of Ripple because they seem to have all sorts of money and make money without making a big deal of it. They have, I'm trying to figure it out. They have all the money in the world, yet I can't figure out how they make money. But I think they have a great product and they have a great consulting and advisory business. I guess the best way to say it is if you want to get something up and running quickly, you can call them. And then, of course, I like DAI. I'm starting to participate in various different distributed, and the way that DAI went about doing things and their potential growth through the introduction of real world assets into their DAO could just really blow the shirt off the whole thing. And I'm involved in this another project called Swiss Asset DAO. That's just getting started. It's a completely legal under the laws of Switzerland. No gray area, no, we're here, but we're really in Panama type thing. It's completely legal in the laws of Switzerland, and they're going to be providing plugins to other DAOs to be able to basically be legal in Switzerland, the various places that they're licensed for. And so there's a lot in that, hopefully into DAI, as I say, but hopefully using those real world asset, the value of that coming in, it'll push projects like DAI and other ones associated with it into new levels of growth.
Austin, are you still awake over there? Hello?
Yes.
Okay.
What do you vodka?
What do you got? What's on your mind, Austin? I'm pulling up a chart real quick because Bitcoin's actually moving a little bit here.
Basically, you want me to talk so you can do something else. That's
Yep.
it.
Yep.
Exactly. At least for a minute.
Actually, I was enjoying listening to Tom. Man knows a few things, so I was learning a little bit there. So, I think. So, Tom, I'll ask you kind of a question. What's your feelings, expectation? Because it's been kind of the running commentary on Zach's and my channel for a while now. But, we've got the halving coming out, right? We've got the halving in May of 24. At least that's the latest consensus. What's your 2 cents, if you have an opinion, on the strike price, the price of where Bitcoin will go, kind of overriding opinion is 100,000. Kind of, but I think the big question is when. Is it before,
right.
After? What's your 2 cents there?
I don't think the halving, however you pronounce it, is gonna really have that big of an effect. Simply because of the size of the market now. But if you look at the halving pattern, whatever, I can't say that right. It had outsized influences when the price was much lower, because it didn't take as much capital to really move the price a lot. If you think about the amount of money that needs to come in to Bitcoin to move it from 30,000 to 90,000, that's to triple its market cap. That's a lot of money. That's another, we know there's plenty of money out there. I mean, the institutions have trillions of dollars. BlackRock could buy the whole Bitcoin thing and not even do it before lunch. But that's not the point. In order for it to really, really get up there in price, a lot of money needs to come into it. And we need to think, where does that money come from? If we wanted to get to 100,000, let's just say you need Bitcoin to 10x. It needs to get to $4 trillion in market cap. Where does that 4 trillion come from? Is it coming from retail pockets of more people putting more money into it, or is it coming from institutions really dumping a lot of money into it? And I don't have the answer for that. I feel that institutions obviously need to put a lot of money into it. And so in the past, Bitcoin went from went from $1,200 to 60,000 because of kind of that shadow banking principle of, FTX borrowing from Genesis, Genesis borrowing from Celsius, Celsius borrowing from these guys. And then they were all pumping up their own tokens, and the banks didn't know how to do due diligence. So they were lending a lot of money to these guys, which they would just use to pump their tokens in Bitcoin more. And it kept 69,000. And then the credit ran out. And once that credit ran out, that's when the holes kind of started forming in the cheese. And that's when the eyes really got put on FTX and the whole thing collapsed. So that free money, that whenever a credit market expands, you get increase in your growth goes up. Just like throwing money into the economy, the inflation goes up because you're turning the money printer on, and that's what FTX and that crew is doing there. So they money printed that Bitcoin price up, and so we need to get back to that price. We need to replace that with real money. Where's that coming from? Where does that money come from? That money comes from institutions dumping into it, or people all over the world saying, "Hey, this is going to be a good thing. I'm going to get into this." One of the ways they do it is this, the BlackRock ETFs, that type of stuff. That everyone says this is going to be big money going into it. But let's not forget, every dollar that goes into an ETF is not one that goes into buying Bitcoin directly.
Right.
So that can be a wash. And also the ETFs introduce a short selling aspect to it too. They can put more short pressure on. and so that's things people think about. Oh, the new volume coming up with ETFs is going to be amazing, but you got to think about it. It's not. If BlackRock wanted to just get their clients to invest in Bitcoin, they just get a company hot wallet, say, all right, we're going to buy Bitcoin. But what they're doing is they're setting up a vehicle for them to trade. Even if the market doesn't go up or down, BlackRock and those kind of companies can make a fortune in trading the volatility of it.
And Tom, on that point, what are they going? How are they going to tell their clients? Are they going to say, "Hey, this is a less risky way to invest in Bitcoin," right? Because essentially they're misguiding them in saying that, right? Like, does that make sense?
I think yes. They are the difference is that big corporations can insulate them. With big corporations with lots of liquidity can insulate the price movement enough. And if there's an easy no cost way to arbitrage between the ETF and the Bitcoin spot price, then there's nothing they can do. People will arb that all day. But if there is any little barrier, like the what's the fund that's trading at a discount? The
Grayscale,
right?
Yeah,
if there's a barrier to the arbitrage, then they can mess around with the price or not. They can support it to keep their investors happy by using company funds, just like a company buying its own stock shares. Or if they need to raise some money, they can sell some also. And so it gives them more options than just directly investing in Bitcoin through a hot wallet and stuff like that.
So does a lot of this money come in from retail investors? I mean, because we are still at a really, low point there. What, 5% global adoption? I mean, we're seeing, more and more chatter about countries doing something similar, making Bitcoin legal tender like El Salvador did. I mean, so what are the biggest catalysts, do you think, for widespread adoption and price impact?
Well, one of the things we need to realize is that when we talk about the adoption around the world, is that most people around the world can now get into crypto, but they don't have the money that you think they do. Like, for instance, I was involved in one project, and one day we got 30,000 new holders from a country in Asia. And you're like, wow, this is amazing. They were all investing $1 or $5, hoping to turn it into $20, which would pay their monthly rent. And so the amount of people that came
sorry,
in.
I gotta go, man. I got people looking for me. Sorry.
All right, go ahead, man.
Nice to meet you. We're gonna talk.
Nice to meet you, Austin. We'll talk to you again in the future.
I wasn't even supposed to be here. Zach wrangled me in. He's like, "Come on." I'm like, "All right." So, all right, I got to go do something, but we'll get together again. See you guys.
See you, dude.
Cheers.
Bye.
Anyways, I was saying that there was all these people came into it, but the total amount of money was very small. And so if we're counting on the retail end of it to really bring the price of Bitcoin and related projects up, we need a retail from the OECD countries of people that have wealth. And I don't mean the wealthy people. I just mean, above average for the world, and have that extra $1,000, $10,000 to do it. And they're going to trust it in Bitcoin. Because if you can get a couple of million people do additional, that type of stuff, that's a good thing. So I feel that the retail market at this point isn't strong enough to really push the price up, because with the volatility and the narrative in the press as being Bitcoin bad,
Right.
it keeps a larger amount of retail people out of the picture. That being said, the institutions are laying the groundwork for it now, and we can see that, and they are immune to what's being said in the press. And if you do a little patent research, not that I've done patent research, but I've read an article about it, Bank of America is the largest holder of blockchain patents in the United States.
Interesting.
And JP Morgan's not far behind them. And there may be other companies that they use, subsidiaries and shell companies to do the patent stuff, so you can't aggregate it. But the banks are really putting the money into it, and they're doing that for a reason. They're doing it because they're planning on the future. They're doing it because they know the money's going to be there, and they know that when the money is there, they want to control it. And so I think that while retail can do it, it's not there yet, and it's going to rely on institutions to pump the price up, which will help then drive the retail back into it once the news kind of media, the story and narrative changes to the good.
Mm-hmm. Super interesting conversation, guys. If you're enjoying this, make sure you hit the like button down there, subscribe down below. Also, check out Tom's channel. Make sure you guys give him a subscribe over there as well. Yes, he's got a great live stream coming up tomorrow, 10 o'clock a.m. Eastern time. So talking about, what are you talking about again tomorrow? Canada Exchange ready for real world.
Yeah, Adam Kai from Virgo Exchange. But go click the videos tab on my thing there and scroll down. Right there, it's a topic that says Kokomo Finance Rugged. I have a whole series of shows called Rugged, Ruined, and Wrecked that I do. And it just, I use projects that crash out of like getting rug pulled, getting hacked, or getting just have bad management, to teach people a lesson about what not to do for the new person coming in. And I use entertainment and I make fun of people, not because they lost money, but I make fun of the projects that went down. But at each one of them, I try to have a concept that says, hey, look out for this. Like the old concepts of adages of not your crypto, not your keys, not your crypto.
Sure.
What to look out for in projects. And so that's a fun little series, and I've done 3 seasons of it, and I'm getting ready to start season 4 this fall of it, because as we know, those rug pulls and honeypots will keep wrecking you out there.
100%. Yeah, and if you're good, we could still go for a little bit. I mean, I don't have to. I'm
good.
To jump off just yet. Okay, cool. So what else is on your mind? I mean, we've covered quite a bit here. I mean, what's something we haven't really addressed that you think is important to address as it relates to kind of the future?
I got a good one, and it was my show today. Not everyone likes to talk about this. For some reason, I can talk about it at length, and that's taxes.
Right. Nah, I get it, man. Yeah. So what'd you learn?
Do a show about tax, and the have you heard of Friend Tech? Now it's blowing up social media and things like that.
Yeah, and I didn't spend a ton of time looking into it, but I know it's super controversial. Fill us in.
Well, one of the issues with crypto is because and I'll speak from a U.S. Canada type tax situation, is that everything you do, you buy and sell, even if you just move money from a token to its liquidity pool, is a taxable event. It's a capital gain, either long-term or short-term, and it's a pain in the ass to keep track of because there's zillions of transactions. And now, as a social media platform has popped up, in which you, in essence, pay to post, pay to buy and sell access to people's lists of followers and things like that. Each time you do that, it's a taxable transaction. And it's somewhat ridiculous. We're in this situation because the IRS has classified this stuff as property, not as currency. And so every time you buy and sell something, it's a taxable event. And so just friend.tech, they did $1 million in fee transactions the other day, which was more than the Bitcoin validators earned in that day, and more fees than Ethereum generated in a day too, which is frankly amazing.
Mm-hmm.
And each one of those is a taxable event. And so I was having this discussion with with Patrick Camuso, CPA. You can find him on LinkedIn. His accounting firm is dedicated to digital assets. And he said, hey, let's not forget about NFTs. And I was like, okay, here we go. And when you buy and sell NFTs, or if you're a dev and you issue a project, did you collect sales taxes on that? Because your local like when I'm in Chicago, your local jurisdiction wants its sale of property being sold as a business. And if you buy and sell them and you treat it as a business, like even just as a sole proprietor, as a day trader, that's a business. There's certain limits in which you need to then pay sales tax to your local jurisdiction. And I was like, it's one of those things where you go, of course I knew that.
Right.
And
right.
then you're like, but nobody wants to address it. And they're like, well, it's internet, so it's, there's an exemption and blah, blah, blah. Turns out there's not. And if your local jurisdiction charges sales tax on property or property transfers over a certain amount, then you could be hooked up in that. And that was very interesting to talk about. Not from, wow, this is exciting tax, because it can never be exciting, but it's something that can quickly ruin your whole day if you, get caught up in an audit or have to pay penalties and things like that. So for those of you listening in the U.S. and in Canada, you got to pay. You don't want to pay the man, but you got to pay. Imagine only making it 5% and then realizing that you screwed up your taxes, so you have to pay a 20% penalty. So you're actually down 15% because you got to pay the man.
It's crazy. Yeah, it's crazy. And we've had some tax experts on the channel here before too, around the tax time. And I've told people kind of my story. I've hired somebody full time to run, basically keep track of in real time all of my decentralized wallets. Because if you kind of wait till the end of the year and you try to compile all that stuff, it's just, number one, it's probably not feasible to get it all done. And number two, you're probably going to have errors. So we track it month by month. And of course, this time of year, or this time of cycle, I guess you could say, trading a little less, I would say, than normal. But, it can ramp up from month to month. So I try to keep, on top of it on a monthly basis. And I think it just depends on how much you trade, how much you do on the DeFi side. But I have literally a spreadsheet, Tom, for every single asset that I've ever owned. And it's like nuts. So I'm probably a little over the top with it, but it's like, you'd rather be that way than, kind of willy-nilly with it. Right.
So. I can only agree with you. And I remember having, thankfully, when I started in crypto, I had one wallet. And I used one exchange. So it was relatively simple to show how much money you lost.
But then when you get into 20 or 30 wallets, and some of them are on your phone and some are on your desktop, and this one's got 10 NFTs on it, and this one.
Yep.
Yeah.
What's the fair market value of something? And today it's 2 ETH. Tomorrow it's 0.002 ETH.
Exactly. It is a headache. I mean, hopefully we do get some kind of clarity on all of that, and makes that a little bit simpler for everybody that's trying to keep track of that stuff.
Yeah, one of your commenters, Sean, here, he says, for Canadians, when you are reporting your crypto, it goes into capital gains. That's absolutely true. But just remember the $30,000 HST exemption. If I'm talking about from Ontario, and if you buy and sell, if you sell more than $30,000 of property, and if you're day trading, that's considered a business. Then you got to pay the man the tax.
Definitely. Yeah. So it's interesting. What else did you learn? Anything else kind of that struck you in the conversation with the tax guy?
Yeah, it's kind of the basic thing is that the the way we have to do it now is taxes should not be unfair. And I don't mean just in the amount of dollars charged. I mean in the amount of time you have to dealing with the government. And the amount of time you have to put into and it's in the tax code somewhere. I can't remember where it is. It says the intent of tax is not to burden the taxpayer. And every document they put out has a little thing on it, says the burden and the amount of time it's supposed to take. And somebody's actually in charge of making sure that for the average person, it doesn't take that long to do your taxes. And it doesn't. If you just have a W-2 form, or in Canada, a T4, you do your taxes, takes 10 minutes on a online form. But if you have investments, you have this, that, you have K1s, all this kind of stuff, it gets complicated quickly. And the burden that crypto is putting on people because they treat everything as a property, and the volume of trading going on is outsized compared to the amount people actually paying. I mean, if you hire a guy and spend dollars and time and all this kind of stuff, and then you have to pay the government a couple $100,000 in tax, then that's fine, because that's equal. But if you have to do all that and you paid the government $20,000 in tax, or 30, that doesn't, your expenses, they limit the amount you can spend on tax per year based on on tax preparation based on your income. Yeah. So it's at this point it's unfair, and something has to change, and that requires policy changes. And we know how quickly policy changes happen, right? No, not fast.
Yeah,
at
they
all.
don't happen. Yeah. Or if they
it
do,
won't
they
happen.
take a long time.
It won't happen until someone like Patrick McHenry of the House Financial Services Committee invests a lot of time trading crypto, and then someone says, "Oh, you got to spend $50,000 on a tax accountant figuring this out." And then he's like, "Well, wait a minute, I only made $40,000." And then you're like, "Well, that's the way the code's set up right now. You got to do it." And so that unfairness is something that probably not a lot certainly not a lot of my viewers, and probably not a lot of your viewers actually think about. Because ultimately taxes, and once again, not the dollar volume, we can argue about that all day, but the way you do it, the amount of time you put it needs to be fair, and should not be a burden on the taxpayer itself, the tax preparer. So that was interesting to learn. I was like, that sucks. Yeah. Let's get the lobbyists going, but that takes forever.
Yeah, no doubt. So yeah, that was the conversation Tom had today, guys. That's pinned up on his Twitter account. Make sure you guys give him a follow over there. It's at @striking_balls on Twitter, and then DYOR Media Network over on YouTube, especially if you're getting some value here. I think Tom's definitely throwing down some value here today in our conversation.
I hope so.
Yeah.
A little background about for your viewers. I got the term when I started in crypto. Everyone's like, "You need a crypto name." I was like, "Well, digital name. I don't know, whatever." Right. And I went to sign into Reddit, and my old account had been disabled, and so I had to start a new account. And it said, "We suggest this name for you." And it said "Striking Balls." And I said, "I can't let that one go." So I said, "All right, I'm just going to keep that name." And I used it all over crypto. But I immediately thought, and I got a picture of poor guy getting kicked in the ding-ding there, to use as an avatar. But then other people thought, "Hey, Tom, you're a golfer. You like to play golf. Striking Balls is golf." And so depending on the crowd, I tell which story is what it's meant for. If it's like the adults in the room and things like that, I'm like, "Well, it's, because I like to play golf." Yeah. But if it's a regular in crypto, what happens in crypto? You get kicked in the Johnson all the time. And that's what Striking Balls means. But I like it, and I had to shorten it to just Striking. So now on my show, I introduce myself as, "Good morning, everybody. My name is Tom, otherwise known as Striking in the digital media world." And I go with it.
So speaking of golf real quick, this is Quintero out in Scottsdale. Played this one in January. Unbelievable. I played yesterday, actually, too. This is a local club back where I'm from. This isn't a private club. It's a public club. I've made a lot of tweets here. Let's see. Where the hell is it? There it is. Good little track. Good little public track out there. So, yeah, I'm a golfer, too.
I like it. I don't get to play golf. I used to play a lot of golf, and then I had kids, and that ended the finances for the extra finances for playing golf. But kids are getting to that age where they're out and about now, so I have more time. And thankfully, up in Canada, I have some people I play golf with, including my father-in-law, which gets me on some good courses. I played the National up here this year and last year, which it was an unbelievable course. I lost a lot of golf balls on that course.
Yeah, yeah. Usually that means it's a nice one.
Right. Yeah. And then there's these things called trees. And I was like, ooh,
Yep.
this
Yep.
is not good.
They get in the way. Yeah, for
But I
sure.
love it. I miss playing, but I enjoy when I get back to it.
It's good stuff. Yeah. So everybody out there, make sure you hit the like button if you haven't already. Definitely helps us out. Also, quick plug to my XT Algo. If you guys are looking for a trading indicator out there, we are now live with it. XT Algo is live, 30-day money back guarantee. If you're looking to get into trading and you want a tool to kind of help you along, plans and pricing are all down here. There's a discount code down in the description. Again, try it for a month. If you don't like it, 30-day money back, full refund, no questions asked. But I'm thinking you'll really like it if you take it serious. Just a quick little plug for it here. So this is a half hour candles here. All right. So we got our momentum up indicator back here about an hour and a half ago, 2 hours ago at the just over 26,000 level there. And already the indicator doing exactly what it's supposed to be doing. The reason why we just have momentum up, momentum down on here, keeping it very simple. There are a couple different modes here on TradingView. So I can go ahead and put both modes on. This is retracement mode along with momentum up and momentum down. Very simple. I walk you through on how to use it after your purchase. So if it's something that interests you guys, link down below in the description. That is XT Algo. So, Tom, what else is on your mind, man? In terms of this Bitcoin halving, you said something earlier kind of about how big the market cap is now. I mean, historically, after Bitcoin halvings, we have seen some price impact, but it has slowly decreased as Bitcoin's market cap has gotten bigger, right? So what are your thoughts on that? And overall, do you think things are going to be timed up in terms of getting inflation under control, getting recession fears away from us? Where do you think all that lines up with the next Bitcoin halving?
I think it's an interesting confluence of events because we have the Bitcoin halving coming up, and we have the U.S. presidential election, and not just the presidential election, but the election for the U.S. House of Representatives and a third of the United States Senate in the same year. And traditionally, during the coming up to a presidential election, ultimately in the U.S., regardless of politics, the economy kind of is what drives people to vote. And whether it's a real economy or perceived that they're doing better, that's what drives the voting. Yeah. There's plenty of other crap going on too. I get that. I'm not going to get into that. But and so with the optimism with the Bitcoin halving, the presidential election, I mean, the current administration is going to do whatever they can to get inflation under control, just so it gets out of the news. If inflation stays low as it is right now, we realize it's a theft of money and all that, devaluing your own assets. I get that. But if inflation stays low, it's out of the news cycle. And also, people are not going to the store like I did yesterday. I bought $200 worth of groceries. That was probably $6 worth of groceries a few months ago. And so if that is out of people's minds, then that's a good thing. So the government's going to work hard to do that. So I anticipate economic measures coming out that will get the inflation policy off the news cycle, which means that inflation is under control, and getting a little stimulus out there that doesn't involve just turning the money printing on. How they can do that is beyond me, but they can't just turn that money printer on without inflation going back up in the current climate. But so I anticipate good news coming out of the economy so that the people running the current administration can brag about it during the election cycle. And with the Bitcoin halving coming up, traditionally, it's my opinion that this one is overblown because of the amount of dollars that needs to really move the market now. But we also see it further down the line. You see, 12 months after the halving, you see it after the halving, you see some consolidation, and then it starts to go up after that. If that pattern continues, that's a good thing. And if the election goes smoothly and the economy's rolling okay, I think all that'll play out according to patterns because as we see from just pure technical analysis, patterns in Bitcoin do seem to come true. But if the election's a shit show and the economy's not good, we could see we could, in a literal sense of the word, we could see a decimation in the price of Bitcoin. I mean, there's plenty of people out there calling for it, after the halving to be $100,000, but there's also people calling it for $10,000 right now.
Mm-hmm.
That a couple of months ago we would have said they're loonies. Those guys are nuts. But then they predicted. Then they came out and said, well, it's going to come down. It's going to stick around 30 for a while, consolidate, then it's going to, basically in the next couple of weeks, it's going to crash down into the lower 20s, and people are like, "You're crazy." Guess what happened?
Yeah,
it followed that.
It's playing out.
Followed that. So it's hard to argue with when you look at the heat maps of where liquidity is on the charts, when they show where that liquidity is, and it's different than the resistance and support. I'm not a technical analysis guy. I'm a fundamental kind of look at the market type person. So yep. I don't really fully understand this, but when you can look at a chart and go, something's amiss there. It's got that with Bitcoin. So if there's any hiccup coming up in that election cycle, or with the economy, and not just in the U.S. but worldwide, there's going to be a bloodletting.
It's interesting from that standpoint, right? From the legal or I guess regulatory standpoint. It's interesting because I've heard more conversations about Bitcoin for sure in these discussions, whether it's coming from a political candidate like Robert Kennedy Jr. and then everybody seems to have a stance right now on the future of digital currency, on the future of crypto, on the future of Bitcoin, on the future of CBDCs. I think all of that is probably good, but there's a lot of unknowns there because, I think Bitcoin is kind of looked at as something completely different than everything else. And then stable coins is a whole nother can of worms, right? But it's like you look at the two governing bodies in the United States, the CFTC and the SEC. Yeah, they look at Bitcoin as pretty much a commodity. I mean, they've
right.
kind of come to the agreement that, hey, Bitcoin's here to stay. It's okay. Everything else, I don't know, right? We don't know. And it's just like, and then stable coins, I feel as if that would be the thing that they want to tackle first because it hits their bottom line the most, right? It's the biggest threat to the dollar, the banks, the system. Would you agree? Or
I would agree with that, but I'm confused about one thing, and I've talked about it on my show, and I haven't gotten good clarity on it. Stablecoins based on the U.S. dollar essentially are warehousing U.S. dollars for a tokenized dollar.
Well, I guess so. On that point, real quick, USDC could be okay in that regard, then, right? Because they're supposed to be backed, I think. But USDT, I don't know.
Then again, we saw Tether just report earning, $1 billion or something like that. And I was confused. I was like, wait, how does a stablecoin company earn so much money on something that doesn't really trade? And then someone pointed out to me, hey, they bought $80 billion in U.S. Treasuries or something like that. And the interest rates on those have gone through the roof. So they're earning, 5% on 80 billion. That's a lot of money. That's a lot of money.
I didn't know that. That's interesting.
Yeah. And so I was like, okay. So in two aspects, people look at USDT as a potential threat to the dollar, but they also help stabilize the U.S. government by injecting $80 billion into the Fed, which then bought the U.S. government bonds for that $80 billion. So the cycle, the cycle continues with those. And while interest rates are higher right now, not high, they're just higher than we were used to the past couple of years, people are making money on treasuries. And it's guaranteed, as long as the U.S. government exists, they're going to pay that. So the stablecoin market is big right now, and I think you'll see more companies other than PayPal issuing them. But are they a threat to the U.S. dollar? No, I don't think so, because simply because they're based. Most of them are based on U.S. dollars, and most of them are backed by dollars and treasury. Even if we can't prove what Tether completely owns, whether they're one-to-one backed or whatever. The fact that they've bought so much in U.S. Treasuries and have those on hand is just a good thing. And suddenly they have $1 billion in cash to add to it too. So thanks to Uncle Sam, Tether got stronger.
Yeah. Do you think? What do you think about PayPal getting into the stablecoin game?
think it was an eventuality. They were going to have to do it. Like I said, all of the money transmitter people are switching to blockchain technology anyway to settle transactions more quickly.
Mhm.
And so I think the fact that they were probably starting to do it on the back end anyway, and then they said, wait, if we put a little bit more money into it, we can have a stable coin. And if you forget, PayPal is very well known for taking payment from you and not settling it with whoever you're paying it to for a period of time. I don't mean like when you just instantly, if I were going to send you $10, that's generally pretty quick. I'm
Right.
talking about when someone uses the PayPal merchant system. PayPal has a big float of money. At any one time, they probably have $1 billion in float that they've earned and haven't paid out yet. So that money, they buy spot market treasuries with that. They invest it short term. And when you have $1 billion, you can make a couple $100 million of it on short term investments. So very, very little risk, as long as the interest rates are high right now. But
Yeah.
And so I think it was a no brainer for them to get into it. It really be able to offer it because it's a brand name. They've got the worldwide infrastructure, they've got people, they've got the compliance departments already set up. I mean, that's compliance and reporting is half the game. No, I think someone told me it's about 80% of the game of being a legal money financial entity is just the compliance and reporting. The other 20% is just getting your job done. And so they once you have all that set up, they can rock and roll and go with it. And I think they'll have a pretty large, a market cap in just their stablecoin pretty quickly. And I understand people have given them grief. They're like, well, they can just zero out your account and they can freeze it. And there was all these chatter on the internet about how it's not DeFi, it's centralized and all this type of stuff.
Right.
But I just want to point out that PayPal never came out and said they were creating a decentralized stablecoin. All they're doing is saying that we are offering our services also now via a stablecoin. And organizations like you and I, we probably have wallets with dust in them that we can't get out of because it's not worth the time.
Yeah.
Financial institutions do not leave accounts with $0. If PayPal left 1 million accounts dead or abandoned and they all had $1 in them, since they're a guaranteed 1-to-1 ratio, they would have to maintain $1 million forever, even if they, ended their whole program backing
Right.
that. So they want to be able to zero out accounts. They want to be able to seize the money if the government comes and gives them a legal subpoena and says, we got to have Tom's money. And so they got to be able to do it. They never said they were decentralized. So when people got all crazy about it on the internet,
I think people
Tether
just
can
like
do the
to,
same thing. Right.
yeah. People just like to take that side of it, right? They like to fight the good fight for the people, right? So I get it. I mean, but that whole thing, if we'll stay on that for a minute. It's like those same people want adoption. Those same people want crypto to go mainstream. Like you can't have both. Like you can't have full DeFi, full decentralization without like big players coming in that are quote centralized authorities and right. So it's like, what do you want here? Do you want an underground kind of deal like it's been, or do you want this thing to get really big? So on the stablecoin front, that's cool. What about this whole security versus commodity? What are they going to do with everything else that's not Bitcoin? I mean, you can't go case by case, right? Like you can't sit here and say, okay, yep, we're going to spend 3 years on this one, and then we're going to spend 3 years on this one, and so on and so forth. I mean,
well, I personally think that ultimately Ripple's case will be successful, and that the way that they turned out,
like Ripple will win.
Ripple will win because the SEC is going to appeal it. As we saw a divided opinion, they said the court said, well, the way they sold it institutionally was a security because they went out to the public and sold things as an institution. But people trading things is not a security. I think ultimately they will succeed in the retail side of it because there's no way that with the way that crypto can be created so quickly and the way it's used in their ecosystems, there's no way they can classify it as a security and get away with it. The way that Gensler and crew want to classify, let's just say, we'll use SHIB as an example. Yep. They'll say that's a security. And you're dealing with it, and anytime you buy and sell it, it has to go through a registered broker. That means anytime you wanted to buy SHIB just to use as gas on the blockchain, that would be a security trading event in which you'd need to go through a registered broker. Anytime a project set up shop on the SHIB chain and said, all right, we're going to be a payroll company, but it's going to be on Shibarium, and you need to use the SHIB gas for it. Those would be trading securities, and you need to go through a FINRA registered broker for it. Or it's utterly ridiculous to think that would be a policy of the United States government. That like when they said Solana is potentially a security, or we classifying it as a security, that Solana and Cardano both have massive ecosystems. The value that every time that those companies just transact in their own product, they use a little bit of Solana or Cardano.
Yep,
that's trading a security.
Polygon was involved in that too, right? Yeah,
it's not practical, and that's what the judge said when they're about trading exchanges. There's no expectation of a contract between the two parties. There's no expectation of profit, especially when you're just using it for gas. I mean, come on, guys. Come on, SEC. You can't qualify that. It's got to be a commodity as you just trade it, or list it as a currency and be done with it.
I know the other piece of it is like, did they have an ICO or not? Right. I've heard that get tossed around, and then I think it was the article I was reading was all about Cardano and their ICO. And then Hoskinson was kind of firing back. It's like, yeah, we had an ICO, but it wasn't in the United States. It was in Japan. Their ICO wasn't, and it was. So that was interesting. I mean, does that make a difference? I guess that's turning this into a question. Does that make a difference if they had an ICO or not?
Well, it depends on if the ICO was broadcast out to the public. Right. Was it an ICO amongst a bunch of VCs that they handpicked to do it, and amongst
how do you prove that, and how do you go
right? But if it's if it's out to if you offer an investment scheme out to the public, it's a security, and that's the basic rule of things. But if you offer it just to your close-in friends, your network, people you already have a relationship with, or to VCs and things like that are industry and accredited investors, that's different. That's different. It's not a securities offering. It's a to the public. It's a different kind. It's an exempted securities offering. But man, if it's just your example of going over to Japan to do it, just in my mind, just says that's another jurisdiction that's going to want a piece of the regulatory pie.
Yeah, for sure. And then I've heard the kind of the whole Bitcoin versus everything else is the fact that Bitcoin doesn't have a centralized authority. There's no person, there's no CEO, there's no people you can look up on the website, Well,
that's got to be why they automatically default. They made up all these reasons why Bitcoin is a commodity and not a security. They're like, well, it's because of decentralization and blah, blah, blah. It's because there's nobody to sue. I mean,
exactly.
There's nobody. There's no one to sue. There's no money to seize. I mean, they could sue the validators, but those people are all over the world.
Right.
There was just it was a losing case, and the federal government, doesn't matter whether you're a kind of a civilian arm of it, like the SEC or the Department of Justice, they don't like to lose cases. You're literally prosecutors' careers end by losing cases, unlike the locals, where they're like, well, I get to win about 60%. That's good. You lose a big case in the federal government, your career's over.
Now what's
go
ahead. Sorry.
No, I was just gonna say that's why they come out with the hammer, and they come out with a huge hammer because they want them people to settle because they don't want any chance, and that's why the government wins 98% of the cases they file, either by settling or trial, because they come out with the hammer, and you're like, screw this, I'm just gonna pay the fine.
Yeah. Yeah. They tried to do that with Ripple, and then Ripple spent $200 million to fight the good fight. And here we are. So with Bitcoin, here's the funny thing. So 2 other cryptos in the top 15 have what Bitcoin has, in that they don't have any centralized authority. They don't have any person to sue. You know who they are? Dogecoin and Shiba Inu. Seriously.
I'll give you, well, with SHIB, there's someone there. And if the government wants to find out, they eventually will.
But isn't there someone there with Bitcoin?
That's true, but they have not been able to find out who that
person's
person
anonymous, and so is the person who invented SHIB and
well,
Doge.
I think the difference is that the at least from my opinion, is that the what was available to figure this stuff out in 2008 or 9 versus nowadays is different. And two, there's an active group of, the top validators and other people that kind of decide if Bitcoin needs a fork or an upgrade or something like that. They certainly didn't create it. Well, we don't know, but also with SHIB, there's a pretty big marketing group behind it, and there's money there. And so where there's money, there's a trail. And so if that wants to be found, it can be. Now, I'm surprised that the great internet hasn't outed all those guys anyway. So we shall see.
It's crazy. I mean, because Dogecoin would be, this has been around since 2013, and SHIB essentially did what they did. I mean, same model, right? I mean, early days, SHIB was touted as the Dogecoin killer, right? That was the whole moniker. That was the whole marketing behind it. It was the next meme coin because you missed Dogecoin, right? And so same thing there. I mean, 2013, though, Dogecoin's been doing it. Obviously, Dogecoin's a little different. Proof of work versus proof of stake.
Right.
So, but it's interesting nonetheless. It's like those three that are in the top 15, similar in that way, where you don't have a real centralized authority, centralized group of people that's at least public that people know. But Tom, this has been fun, man. I know we want to wrap it up here in a few, and let's definitely do this again. Let's definitely have another conversation like this, and especially around some hot topics and things that are happening. I mean, this is
sure.
I mean, this has been cool. I mean, this is during a slow
been a good conversation. I enjoy it.
Yeah. So we'll definitely do it again. And make sure you guys follow Tom over there on YouTube, DYOR Media Network over there. He's got a great interview coming up tomorrow morning. Check out that. And then also check out his X profile or Twitter profile, whichever you prefer, over there. And I had it up, and I'll find it again here. Let me press the back button a few times. There we go. It's at striking_balls right there on Twitter or X. Give him a follow over there. And yeah, man, it's been fun. Appreciate you coming on.
Appreciate the hospitality you had here, and appreciate talking with Mr. Vodka Drinker there too. I mean, Austin too.
Yeah, that was.
And look forward to coming on again.
For sure, man. For sure. Have a great day, everybody. And Tom, stick around just for a minute. We'll shoot the shit here in a minute. But everybody else, appreciate you guys. Don't forget to hit the like button real quick. Smash that like button for us. Definitely subscribe down below, and check out all of Tom's work as well. We'll see you in some upcoming videos coming out this afternoon. We'll see you.